Welcome back. Markets this morning are trading higher. Take a look. There is optimism that President Trump's big, beautiful bill will pass today in the House, and the president will sign it into law tonight or tomorrow. The Dow Industrial's up 43, the Nasdaq up 17, and the S&P higher by 5.25. Both the Nasdaq and the S&P 500 are further in record territory right now. Wall Street and the major markets closing early today at 1 p.m. Eastern for the July 4th holiday. But as I just mentioned, the major averages, the Nasdaq and the S&P 500, begin today's trading session in uncharted territory. The Dow was down yesterday by 10.5, but the S&P was up 30 points at 62.27, all-time high. The Nasdaq was up 190 points yesterday at 20,393, all-time high. Take a look at the floor, the House floor in Washington right now. This is a live picture of House Minority Leader Hakeem Jeffries still using his quote-unquote magic minute to speak for almost 3 hours. He is stalling and delaying the imminent vote on the big, beautiful bill. House Republican Conference Chair Lisa McClain just told us moments ago the GOP has the votes to pass the bill and will do so as soon as Hakeem Jeffries stops talking. Meanwhile, President Trump announced a trade deal with Vietnam on Truth Social last night that is imposing a 20% tariff on exports from Vietnam, but the U.S. will sell into Vietnam with no tariff on U.S. products. Joining me now is MacroMavens President Stephanie Pomboy. Stephanie, great to see you. A lot to take on this morning with all that is going on. Yesterday, we saw a weaker than expected jobs number. What are your expectations, and how would you assess the economic backdrop today?
Well, thank you so much for having me, Maria. I promise not to talk for 3 hours here. Basically, I think clearly we've seen a slowdown in the employment picture. Unemployment claims have moved up sharply, and the continuing claims are now the highest since COVID. Consumer confidence measures reflect a very dour assessment of the labor market from the consumer, and generally they have a pretty good handle on what's actually happening. So that's fairly foreboding, and it's not surprising because earnings estimates for S&P 500 companies have come from 12.5 at the beginning of the year to 7% growth now. So those earnings estimates have come down. And as I've said here a million times before on every payroll Friday, employment growth is a function of profit growth, not necessarily whether profits are rising or falling, but that even if they just slow, that will slow employment growth. But I think the question for us now with the big, beautiful bill and the tariff, the trade agreements that have been brokered is whether that cloud of uncertainty that has caused all this weakness in employment and capital spending will now lift. And as the Treasury Secretary told you just a little while ago, that we will see stronger growth in the back end of the year. So I think that still is very much of an open question, and we'll see. I mean, I'm hopeful, but I think there are a couple pretty serious obstacles that we'll have to overcome to get there.
Now, the Treasury Secretary told me to expect a 3% plus economic growth in the second half of the year and into 2026. You've talked a lot about the private debt that is turning over and needing to be refinanced this year. I asked him about the government debt, $9 trillion coming due. He said they're going to roll it over in short term. But I also asked him about the Fed because the president keeps pressuring the Fed to cut rates. Here's what he said. Watch this. Do you believe that if he cuts rates on the short end, then long-term rates would also get impacted by that?
The committee seems to be a little off here in their judgment, and I think that, as we see inflation coming down, just based on previous Fed models, that rates will be lower.
Do you want to see Jay Powell resign?
I want to see the Fed right-size their budget.
I see. I mean, look, Secretary, you've got an incredible job, the leading person in terms of the economy in the world, the U.S. Treasury Secretary, and yet your name was on a list, apparently, for the president considering you to run the Federal Reserve. Is that a job you would like?
We have a lot of great candidates for the Federal Reserve. I think I have the best job in Washington. I get to interact with the president. The cabinet that he's chosen is fantastic, and being part of that cabinet is the dream of a lifetime for me. But I will go where the president thinks that I am best suited.
Has he asked you to potentially take on that role?
Maria, I'm not going to reveal private conversations, but I'll tell you, there are a lot of good, strong candidates, and we get to hopefully fill 2 seats next year.
Stephanie, your reaction?
Well, I mean, I think this is the key issue. When I mentioned obstacles to getting that better growth in the second half, the primary one is the higher interest rates. I mean, interest rates have been stubbornly elevated in the face of this decelerating growth and the dramatic retreat of the inflation pressures, all the hysteria about the tariffs notwithstanding. So I think that's kind of sending a warning signal to me that the rest of the world is basically saying, you guys got to get your fiscal house in order. And they're basically penalizing us for these massive deficits by refusing to buy treasuries. I know he mentioned that there was demand, but, you know, year to date, foreign central banks have unloaded more than $100 billion worth of treasuries, and that just goes through April. In the 6 weeks since then, the pace at which they're selling is $400 billion. So they're not enamored with our fiscal situation, and we've got to get that house in order to get those rates down and provide relief, not just, as you said, to the federal government, but more importantly, to the private sector. I mean, I don't think anyone cares how much it costs the federal government to borrow. We want to take the weight off of consumers and businesses so they can go out and hire and spend and really revitalize the economy. That's the important aspect of that.
All really important points. Stephanie, stay with us. We are going to have our jobs panel, which you will be part of in the next block.